This is a very interesting topic, which took me a few years to actually understand or discover, to my detriment, to be honest, because I didn't realize the importance and the significance of our cognitive biases. And the interesting thing about cognitive biases is that they're just part of human nature. You can't get rid of them. They can actually be quite detrimental to your trading if you don't know what they are, because you're essentially just being led by your emotions and these false pretenses that you think you know what you're doing, or you think you understand why you're losing or why you're winning, but really there's so many biases that are occurring that you're so completely blind to. Today's topic is all about identifying these and using your mind and understanding what your thoughts are made up of in terms of the processes of your thoughts, both on a subconscious level and a conscious level. And cognitive biases, they tend to be unconscious. They tend to be occurring without you consciously knowing that they're occurring. And that's why they're so difficult to detect until it's just too late. We need to use our mind. We need to use it. We need to weaponize our mind. It doesn't matter how many trading tools and aids you have available. If you are unable to engage your mind in any constructive market analysis, trading just won't benefit you at all. So the quality of your analysis, the quality of your processes is so important. They're so fundamental. And that's why I'm a big believer in process over outcome, because if you're just focusing too much on the outcome and not so much on the process, you just won't be able to identify the mistakes, because, you know, we're led by our instincts, our impulses. As a trader, our impulses are actually quite counterproductive most of the time, especially if we're under pressure, especially if we need to make a decision quickly. We tend to go into our default state, and our default states are usually fight or flight responses. And you don't want that in your trading. And so as a trader, you need to develop a certain way of thinking, a certain methodology and process, so that when you are making decisions, you are making them from a rational, objective point of view that is using a strategy that has a positive expectancy, a trading plan that you have pre-planned before the trade. It's quite difficult because we all come in with this default state. We all enter trading, and our default state means that we're making, we're plagued by cognitive biases that impede our thought processes. Ultimately, our decision making is flawed. It really does impact our trading on a daily basis. We either end up losing a lot of money, or we end up giving back a lot of profits, or we end up missing out on many profits. And so today I want to go through some cognitive biases that are quite typical in trading. There's so many. Whilst doing my research, I came across so many cognitive biases, and some of them, they all relate. They all kind of relate to trading, but I chose some of the ones that I think that are the most common, especially for me personally, in my experience, and ones that I'm constantly plagued with. Cognitive biases is not a new phenomenon. It's been limiting humanity for a long time in all walks of life. As long as we understand our cognitive biases and we can recognize as they're happening, we can mitigate them. And the ones that we can't recognize, then at least we have a plan in place. So being aware of these thinking flaws has two main advantages. Firstly, it helps you to avoid them in your own trading. And secondly, it can help you identify and explain seemingly irrational market behaviors caused by these biases. And that's so interesting because you can actually see cognitive biases on a mass scale over mass psychology. You can see when price is going parabolic. You can imagine just how many retail traders are just getting suckered into that move and buying at the highs or selling at the lows. It's that fear of missing out, I guess, that natural impulse to not miss out on these massive moves. And so by the time you end up going into these moves, it's already too late. And that's happened to so many times. And it happens to every trader, where we impulsively try and jump into a move when it's already too late. And we end up giving away our capital. We end up losing because of our impulse.